네, 미국 시카고 선물거래소와 월가 현재 동향을 생생하게 전달해 드리는 시간이죠. 월가 트레이더 버니의 미국 주식 시간입니다. 오늘 시간 같은 경우는 이 길었던 코로나 종식을 준비하는 글로벌 경제가 러시아와 우크라이나 사태라는 리스크를 또 안으면서 계속해서 좀 변동성이 커져가고 있는 이 상황에서 어떻게 이 주식 시장은 대응을 해왔고 변화를 했는지에 대해서 들어보도록 하겠습니다. 함께 보시죠.
If we want to look at the stock market now and think about what's going to happen down the road, we want to think about a few things. We want to think about what does the stock market do if there is a recession? What if we go into just a growth slowdown and then come back and start to improve on growth? So that's one thing we want to think about. We've seen that we're in a corrective phase in the market. We identified periods last year where we could see the internals, the advanced decline line for stocks, number of advancing shares, less number of declining shares go down. We could see stocks making new 52-week lows were more in excess than stocks making new 52-week highs. So we saw these stocks individually themselves starting to roll over fairly significantly. Now what we've seen is we've seen a concern about what the Fed's going to do in terms of raising interest rates. We also have a little bit of an issue from a global perspective of Russia trying to invade Ukraine, bring Ukraine back into the Russian sphere of influence, and what that's done to the market. But let's just think about the interest rate levels first. If the Fed raises interest rates, will that cause a recession? Will that cause just a growth slowdown? How many interest rate raises are we going to see? Well, what we're seeing right now is the peak of inflation in terms of month on month. And I think we might have one, maybe two more months of fairly strong inflationary numbers. Other people might be thinking it's going to go further out. I've shown on other charts when we've looked before on different discussions that I think over time, over the next 6 months, our inflation rate is going to work back down to 2%, 3%, and not have this 7% inflation level. But let's just think about this first. Okay, if we raise interest rates, which we know we're going to do, okay, what does the Fed say today versus what they actually do down the road? Well, we've seen over years and years of trading. I've traded for 40 years. What they say today does not necessarily have anything to do with what happens down the road. It's a very fluid situation. The Fed only has a certain amount of information. Sometimes they have more information than us, but that doesn't lead them to better quality decisions down the road. We can see right now that everybody thinks that they are behind the curve because they did not act last year. And what they said last year was inflation is transitory and it's going to go back down. Now they're saying, hey, inflation's a more persistent problem and we're going to have to raise interest rates to be able to combat that. Well, let's see what happens down the road, because I don't think that the persistency of inflation is that significant that in 6 months we're still going to have an inflation problem. We'll see, but I think what we're seeing with the different economic indicators that are leaders, like the Purchasing Manager Survey, that will start to roll down. My contention is there are certain observations that we're making today that tell me that I don't think at this point in time we should expect a recession. If we don't expect a recession, then we're going to go into a growth slowdown. If we go into a growth slowdown, that's going to be an opportunity to buy the stock market. So let's just take a look and see what we see so far. The two most important things for a definition of recession is the fact that we have economic growth slowing and going negative. And if we have economic growth slowing and going negative, what we're going to see is wages go down and consumer spending go down because wages went down. So currently, let's take a look at those two items and see what we see. This chart right here shows the gap between the funds rate and wage growth. So what we can see is wage growth in 2021 increased fairly significantly. Now, the funds rate is still down here, but maybe the funds rate goes up to 1%, 2%, that sort of thing. But if we can maintain wage growth at 3 to 6%, that's substantial. And that's going to prevent us from going into a recession, because you don't have a recession with 4 to 5% wage growth. Let's look at the second chart. Coincidental to wage growth, we're always going to see, are the consumers spending money? Okay, so if they see wage growth coming in, are they in turn spending money? Because that's the definition of keeping the economic growth going. So if we look at this, and this basically is looking at credit card transactions, and this is for the week of January 25th, which is the most recent week that I could pull out. What we're still seeing is we've got strong growth. We're up 18% in credit card transactions if we compare it to pre-pandemic levels. So forget COVID. Let's go back before COVID and let's think about what credit card transaction volume was and the dollars that went through on credit card transactions. Well, we've got strong growth so far in credit card transactions. So what do we have? We have positive wage growth of about 5% right now, and we have positive consumer spending on credit card transactions. Now, if we look at this right now, we can see that there are periods where we can trough, okay, where we bottom out. The lines that we need to pay attention to are the red and the green lines, because the green line is a first-term president, and the red line is the second year, this is the second year, of a new Democratic president. So we can bottom in late February, early March based on this analysis. We can bottom towards the end of the first half of the year, and we can bottom somewhere in the October-November phase. Now, when we think about this, we've already had a pretty good setback. So when we look at this, our number is down much further than that. Okay, so this may encompass, the red line and the green line may encompass, say, 18 different observations. We are at the lower end of those 18 observations. So maybe this is the bottom down here, or maybe we have another retest down here. We'll have to wait and see. We look for periods of really high volatility to identify market bottoms. But in the course of this, I still think the second half of the year, and I've been maintaining this, is going to be a positive experience for the stock market. Let's just do a simple analysis. So let's just think about what's going on, because when we think about the stocks and they're in a decline, what really happened? So if we go back and we look at 1928 up to 2021, and look at what happens. What's the average day look like? What's the average month looks like? What's the average quarter? What's the average year? So 52% of all days are positive. That's great. It shows that there's a bias towards the higher prices in the stock market than lower prices in the stock market. So it's not static. 60% of all months are positive. Well, that's great, but we can utilize that piece of information better in an uptrend than when we're in a corrective period. 63% of all quarters are positive. Well, now it's getting better. It's getting better. It's almost 2/3. Now, here's where I think it starts to get interesting. Almost 70% of all years are positive. So 30% of the years are not positive. But if you hold something for multiple years in a row, you're going to experience a positive thing. When we get into the really interesting thing, 78% of all 5-year windows are positive. So we can just kind of go back and just take our 5-year windows and keep extending them out. That's almost 4 out of 5. That's a fairly substantial thing. So if you can identify buying opportunities in volatile markets that have a down bias, a corrective bias like we have right now, and hold for that, and my whole point is hold for that 3 to 5 year window, That's where you make a substantial amount of money. Are we at the bottom of that or not? Well, we were at a really great price in the end of January because we had that really high volatility. We had a substantial amount of short selling during the course of the last week of January. Those are great opportunities. And then what we had was we basically had a 5% rally off those bottoms. We're going to see that, and my thinking right now is that we're going to chop around really hard with volatile periods over the next couple, 3 months, and then we're going to start to work our way higher. Now, I could be wrong because maybe we start and move our way higher sooner, or maybe it's a little bit longer. We're just going to have to wait and see what happens. But I'm looking for that inflationary number to start to roll down and stop going higher.
네, 지금까지 미국 시카고 현지에 계신 버니 씨와 함께 이야기를 나눠봤습니다. 미국 주식에 대해서 제대로 공부하고 싶다 하시는 분들은 하단에 나가고 있는 QR코드 통해서 들어오시거나 샵 0082번으로 버니의 미국 주식이라고 보내주시면 함께 할 수 있는 방법 안내를 해드리겠습니다. 이 점 참고 부탁드립니다.